Welcome to the deep dive. Today, we're really zeroing in on Bharti Airtel.
That's right. We're looking at their performance, specifically their financials for Q4 and the full year ending March 31st, 2025.
Yeah, and we've got a good stack of material to go through. Their official audited results, both consolidated and standalone.
hmm And the auditor reports from Deloitte Haskins and sells the clean bill of health, as you called it earlier.
Right. Plus their investor presentation. So the mission today.
Well, I think it's to get beyond just the surface numbers.
Exactly. Understand what's driving performance, what their strategy looks like, and maybe get a glimpse into the future for them in the telecom space.
Yeah, connect the dots. We'll look at financials, revenue, costs, profit, obviously.
And then the operational side, network stuff, subscribers.
Absolutely. Network expansion, subscriber growth, and those important future signals like dividends and, crucially, their infrastructure plays.
Okay, let's dive right in then. The big picture first. Financial performance. Consolidated for the full year ending March 31st, 2025. Total income.
Came in at 1,745,589 million.
Wow. And how does that compare?
Well, it's a pretty solid jump from the previous year, which was our call to everyday 1,514,178 million. So yeah, a noticeable increase in overall earnings.
Okay. And the bottom line, the net profit.
Now, this is where it gets really interesting. Consolidated net profit for the year was RS 374,813 million.
Okay.
And get this, the previous year was RS 85,580 million.
Whoa, that's a huge leap.
It really is a massive surge. Suggests some pretty fundamental improvements in profitability.
Absolutely. So where did that income primarily come from? Revenue from operations.
Yeah, the bulk of it. Revenue from operations for the year was RS 1,729,852 million. That's the core business driving the income.
Got it. Now, on the other side of the ledger, expenses, what were the main categories eating into that revenue?
Well, the biggest single item, as you'd expect, was network operating expenses. That was RS 335,043 million for the year.
Right, just keeping the lights on, essentially.
Pretty much. Then you had access charges paying other networks at RS 71,713 million. License fees and spectrum charges, sort of the cost of entry, were Rs 138,290 million. Employee costs came in at Rs 63,089 million. Sales and marketing was Rs 114,601 million.
Shipping, getting customer.
Exactly. And then a catch-all other expenses category at Rs 75,524 million.
And how does this translate for shareholders? Earnings per share?
Basic EPS for the year ended March 31st, 2025, came out at Rs 58.00.
Which is up from?
Up considerably from Rs 30.39 the previous year. So yeah, it's a strong story on the consolidated front.
Okay, let's look at the standalone results then. Just Bharti Airtel itself, not the whole group. Similar story.
Very similar story, actually. Standalone revenue from operations for the year was Rs 3,557,389 million the year before.
For the standalone net profit, did it see that same kind of jump?
It certainly did. Reach Rs 178,664 million.
Compared to
Rs 71,161 million in the previous year. So again, a really substantial increase.
Wow. Okay, so robust performance there too. What about the big expense items on the standalone side? Anything stand out?
A similar pattern mostly. Network operating expenses were, again, the largest at Rs 902,801 million.
Right.
Access charges also significant, Rs 427,261 million. One thing that was quite high on the standalone side was other expenses.
Oh yeah, how much?
Rs 1,369,321 million. That's a big number,
Yeah.
something maybe to dig into in future reports.
Definitely. And the other usual suspects, license fees, staff costs.
Yep. License fee and spectrum charges were Rs 19,551 million. Employee benefits were Rs 17,005 million. And sales and marketing was actually quite a bit smaller on the standalone view, just Rs 2,703 million.
Interesting. And the standalone EPS?
Basic EPS on the standalone side for the year was Rs 45.26.
Up from?
Rs 24.97 in the prior year. So yeah, whichever way you slice it, consolidated or standalone, the financial trajectory looks pretty positive.
Good stuff. Now, something shareholders always look out for, the dividend. What's the news there?
Good news for them, I'd say. The board has recommended a final dividend. It's Rs 16 per fully paid-up equity share.
Okay.
And Rs 4 per partly paid-up share for the financial year 2024-25.
But that needs approval, right?
Oh, absolutely.
Yeah.
Subject to shareholder approval at the AGM, the annual general meeting.
And if it gets the nod?
Then the dividend should be credited within 30 days of the AGM. It's
Yeah.
a tangible return based on that strong performance.
Makes sense. Okay, let's pivot a bit from the pure financials. Operational highlights, strategic moves. India seems to have been pretty busy. especially around the Mahakumbh Mela.
Oh, definitely.
Yeah?
They really geared up for that massive event in Prayagraj. Anticipating huge crowds, they put in 287 completely new mobile sites.
Wow, 287 new ones.
Yeah, and they optimized over 340 existing sites as well. Plus, they laid 74 kilometers of new fiber optic cable in the city.
Just for the event or permanent upgrades?
Likely permanent benefits, but definitely time to boost coverage for the Kumbh. And they even deployed 78 of those mobile cell on wheels CLWs, they call them.
Right, the temporary towers.
Exactly, right inside the Mela grounds. Shows a real commitment to handling those peak loads.
For sure. But wasn't just temporary stuff. They've also landed some, well, frankly, enormous submarine cables recently. That sounds really significant for India's connectivity.
It absolutely is. This is about building the future digital backbone. So first, they landed the CME-WE6 cable in Chennai.
Okay.
This thing is huge, over 21,000 kilometers long, connecting India all the way to Singapore and France, cutting across Egypt terrestrially.
And the capacity.
This is the mind-boggling part. It's set to add 220 terabits per second TVPs of global capacity to India.
220 terabits.
Yeah.
That's just hard to grasp.
It's a massive pipe, a huge boost for handling internet traffic.
And wasn't there another one too?
Yes, they also landed the 2 Africa Pearls cable.
Right.
This one provides another crucial international link, connecting India this time to Africa and Europe, going via the Middle East.
And who are they partnering with on that one?
That was a partnership with Center 3 and Meta.
Ah, okay.
And this cable adds another 100 TBPs plus of international capacity. So between these two, Airtel is seriously beefing up India's connection to the rest of the world.
Big strategic moves. Okay, so while all that's happening in India, what about their operations in Africa? How are things looking there?
Africa's showing strong growth too. Revenue was up 23.2% in constant currency compared to the same quarter last year.
Nice.
But maybe even more interesting strategically are the infrastructure sharing deals they're doing.
Oh, yeah. With whom?
With MTN Group, another major player across Africa, they've agreed to share network infrastructure in Uganda and Nigeria.
What's the goal there? Cost savings.
Primarily, yes. Cost efficiencies by not duplicating infrastructure, but also expanding coverage, especially reaching more remote areas and hopefully improving service quality for everyone.
Sounds sensible. Are they looking at doing this elsewhere too?
They are, yeah.
Mhm.
Building on Uganda and Nigeria, they're actively exploring similar deals with MTN in the Republic of the Congo, Rwanda, and Zambia. They're looking at things like RAN sharing. That's sharing the radio access network equipment.
Right, the actual signal transmitter.
Yeah, exactly. And also sharing fiber infrastructure, maybe even building new fiber together. It's quite a collaborative approach. Could really boost connectivity across the continent.
And they also secured their tower situation in Africa, right? Renewed some leases?
Yes, that's important for operational stability. They renewed tower lease agreements with ATC and IHS big tower companies.
How many sites are we talking?
About 8,300 sites across Nigeria, Uganda, Kenya, Zambia, and Niger. And these are long-term renewals, 10 to 12 years.
Okay, so certainty there. But didn't that add a big chunk to their liabilities on paper?
Ah, yes. Good point. Under the IFRS 16 accounting standard, when you sign long leases like this, you have to recognize the total future lease payments as a liability up front.
Right.
So that's why you see a $1.3 billion increase in reported lease liabilities. It's not new debt they suddenly took on. It's just the accounting recognition of those long-term commitments.
Got it. Okay, let's switch gears slightly. Airtel Business, their B2B arm in India. How did that segment do?
Pretty solid performance. Revenue for the quarter was Rs. 53,155 million. Their EBITDA, that key operating profit measure, was Rs. 22,359 million. That's a margin of 42.1%, which is quite healthy.
Very healthy.
And EBIT, earnings before interest and taxes, was Rs. 16,425 million, a margin of 30.9%. They also invested quite a bit, capex of Rs. 24,853 million in the quarter. Shows they're still putting money into growing that business segment.
Makes sense. And what about the passive infrastructure, the towers themselves, mainly Indus Towers?
And towers is huge, obviously. As of March 31st, they owned and operated nearly 250,000 macro towers in India.
250,000 towers.
Yeah, it's vast. And supporting over 405,000 co-locations, that's instances where operators have their gear on an Indus tower.
Right.
They saw a net increase of over 18,600 co-locations just in the quarter. Shows strong demand. Their average sharing factor is about 1.64 operators per tower.
So efficient use of assets.
Seems like it. They also added more lean co-locations, bringing that total up to nearly 14,000.
Okay. Back to Airtel's own direct infrastructure in Africa then. Towers and broadband base stations. How did those numbers grow?
Good growth there, too. They ended the quarter with just over 37,000 network towers in Africa,
Which is up from...
up from about 34,500 the previous year. So clear physical expansion.
And broadband stations.
Mobile broadband base stations grew to nearly 137,000, up from around 125,000 last year, both essential for handling more customers and more data usage.
Definitely. Now, there were a few other sort of financial housekeeping points mentioned too, things about bonds and business transfers.
Yes, a few interesting moves. First, they issued some new shares, about 6.2 million, because holders of their foreign currency convertible bonds, FCCBs, converted them.
Okay.
But importantly, they also redeemed all the remaining FCCDs. So as of March 31st, 2025, no more FCCBs outstanding. Cleans up the capital structure a bit.
Right.
Second, the subsidiary, Network I2I, bought back and canceled $1 billion worth of perpetual bonds.
$1 billion.
Yeah, significant. And third, they prepaid a hefty amount over ours. $51,000 million to the Department of Telecoms for spectrum they bought in 2024, settling those future payments early.
Sounds like they're actively managing their debt and obligations. What about those business transfers?
A couple of strategic shifts there. They moved their stake in Airtel Payments Bank, nearly 70%, directly under the main Airtel Limited company.
Bring it closer.
Seems like it. They also shifted their Internet of Things, or IoT, business into a separate company called Xtelify using a slump sale.
A slump sale, what's that exactly?
It's basically selling an entire business unit, assets, liabilities, everything, for a single lump sum price without valuing each individual piece.
Ah, okay.
And they did a similar slump sale for their passive infrastructure business, the towers they owned, directly before consolidating under transferring that to Indus Towers Limited. They got paid for it, though some cash is held in escrow for now.
So likely moves to streamline things, maybe unlock some value.
That would be the rationale, yes. Focusing different operations within different structures.
Okay, nearly there. Any regulatory updates from India we should touch on?
Just a couple of things on the fixed line front from the Department of Telecoms. One is you now have to dial 0 before making any fixed line to fixed line call, even locally.
Huh, okay.
And longer term, they're planning a fixed line location routing number, or FLRN. The goal is to enable number portability for landlines, like we have for mobiles, ideally within 5 years.
Interesting. That could change things.
Could do. And one other point, a rule about deactivating inactive numbers, both mobile and fixed line, if they haven't been used at all for a year after an initial 90-day non-usage period.
Right, cleaning up unused numbers makes sense. So after all that detail, the big question for the financials, the auditor's opinion, what did Deloitte say?
Deloitte Haskins and Sells gave them an unmodified opinion.
Which means?
It's the best possible outcome. Essentially, a clean bill of health. The auditors are saying the financial statements present a true and fair view, follow all the accounting rules, no major issues found.
Excellent. Okay, let's try and wrap this all up. Key takeaways for you from this deep dive into Airtel.
Well, I think the headline is definitely strong growth combined with very deliberate strategic investment.
Yeah, that profit jump was remarkable.
It really was. Shows maybe better revenue per user, maybe better cost control, likely a mix. And then the sheer scale of investment in Networks India, those huge cables, the Africa partnerships for sharing. It's all very forward-looking.
And the dividend signals confidence, too.
Absolutely. Returning cash to shareholders is usually a sign of financial health and positive outlook.
So looking ahead then, what are the implications? What should we be watching for?
I think the focus on infrastructure, both building it and sharing it smartly, suggests they're really positioning for future growth, better quality, wider reach, competing hard in India, expanding strategically in Africa.
And the regulatory stuff.
Minor for now, perhaps. But the fixed line portability could be interesting down the line. And their proactive debt management, paying off spectrum fees early, redeeming bonds, that shows financial discipline.
Right. So maybe a final thought then for you, our listener, to consider. Given everything we've discussed, the strong results, the big infrastructure bets in India and Africa, the partnerships, what do you think are the biggest opportunities and maybe the biggest challenges facing Bharti Airtel now in these really dynamic telecom markets?
Yeah, and maybe think about how these big strategic moves, these massive cable landings, these sharing deals, how might that actually impact the service you receive as an end user in the years to come?
Something to definitely mull over. Thanks for tuning into this deep dive.